Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, we've got consumer price inflation today. Consensus expectation, spot 3, although I don't anticipate that they will be very far off from the market expectation, and the market is not actually expecting a ton of volatility off of this number. However, if it's bad, it could particularly destroy the market. So, let's just come over here to the charts real quick to look at where we're going. So yes, yesterday we had a pretty good reversal in the treasuries that we believe happened off of Japanese yen. Pretty pissed that, didn't go further while we were trading, because if we were able to hold that for the whole move, that would have been like $70. But anyways, we're a little bit higher this morning. Here you can see the S&P 500 still holding its gains. Oil, they're kind of recovering. Gold and silver had a little bit of a bounce as well yesterday. Copper doing really well yesterday, so that's encouraging. The dollar kind of weakening a little bit overnight, and here's Bitcoin just meandering along. So I'll leave that one on Bitcoin here. Yeah, so the whole thing is that a lot of people are still anticipating that there could be a second wave of inflation. And so if we get that in this report, which I think would have to be a reading of spot 4 or above, that could really mess up the markets. Also, if it's in line, the analysts are mostly interpreting that as positive, and I think that that's probably right on. A reading at spot 3 it would probably be positive. So, but we'll see. I'm not really anticipating that it will be a huge amount of volatility for this event. I think that the market expectations are probably pretty close to in line. Would say that there is a decent amount of movement in the treasuries ahead of the news, though. I'm gonna make sure that I've got my there we go. We've got the news squawk going. Say good morning, everybody. Captain Prize, Kiwi, Octavius, Dom, Brad. It says it's like everybody's here. Not everybody, but there's a good number of you here early, so. And did that news squawk just get cut off there? What was with that? I'm going to relaunch it. Market liquidity really pulling for this one. They're not even putting up 50 in the treasuries, so that's how you know it's a really big one. I should probably sit up for this one, huh? Okay. Month over month was spot 2. What a head fake. Wow. That one was kind of a little sketchy, wasn't it? They went the wrong direction at the beginning there. Spot 2 versus spot 3. That's pretty good. You could get a really big rally off of this in the S&P 500. And let's see here. That puts the treasure... Wow. Already at 4.5 when we were at 4.7 yesterday? Like, good grief. Still going. Nobody's hitting into 4.5 yet, and look at the spread in the micros. 25 tick spread in the micros. Really? Here, I'll take you at 524. No? Okay, now maybe they're waking up. Yeah, there you go. Wow, look, they took out all of the bids. Holy shnikes. I ain't playing that one, but holy crap. That is wild stuff, man. So, spot 2, not like super crazy. Definitely wasn't the consensus expectation, though, of course. The amount of volatility that we are getting off of that is a lot higher than anticipated, I think. So let me come back over here real quick. Where is it? Man, the dollar just got creamed there, too. So what did they say for spot 2? SPX up. So they were saying if core month over month was between 0.15 and 0.25, we would get a 0.75% rally in the SPX. The S&P 500 is already up 1% on the day. What are shnikes? It's kind of like poop, but less vulgar, I think. You know, they're kind of more family friendly Papa Bangings fudge nuggets rather than like a whole mess in the bowl sort of a thing. So the thing that I was like really reacting to there was that the treasuries, the floor fell out of them there. Did they actually sell it? They did. Somebody sold it. And then they bought it back up. And like that move right there was like 14 ticks. They sold it down 14 ticks. So can you imagine to have held a position through that news, you'd have to have a 14 tick stop. So you could be a retail trader sitting there with a stop and you would have just gotten absolutely screwed out of your trade. So that's what it was like. Holy crap, was how strongly it went the wrong way. And then, of course, this, I mean, I think that this move up is appropriate. It's appropriate. But, like, good grief. It's a big one. It's a big one. Kind of puts me in the mode of, I'm not sure I can trade this. I suppose I could try taking some small little scalps here on Sim, I think is what I will try. I'm kind of tempted to try buying it here at 11.5 and get back to 14, but I'm actually not liking some of the deltas that I'm seeing. How big of a change was it? So it was about 20, 30,000 change. I don't know. This could be a trend day. Could be. Not 100% sure. Oh, and by the way, Jiwi, I see your message. After this stream, I'll take a look at that. We'll go and look at their indicator and see if there's a problem with it or something. I would always check your NinjaTrader output window and see what it spits out there. Okay, so let's see if we got any interesting... Oh, looks like that trade would have worked out. Maybe I should have done it. Mohammed A. El Arian, better than expected U.S. CPI inflation numbers with headline flat and core up. Spot 2. This compares with the consensus forecasts of 0.1 and 0.3 respectively. Actually not seeing a whole lot of stuff. Well, it comes right back there. Kind of my issue here is 4-5 actually appropriate? I certainly think that 4-5 would be a reasonable, like, I think that the economy could handle a 4-5. But, you know, the stock market has been rallying as of late. This is going to be a really big rally. And how good can that get over there before you have to start getting hawkish over on the treasury side again, you know? It's kind of like in this area, isn't it? It's settling in a pretty decent area. A lot a lot faster than I would have thought. Looks like maybe they're gonna go and make a push up there again. Might be a hard lift, but I think they can do it. You know any stocks that have the lowest spreads? Oh man, that's a good question. So it used to be Intel, but I don't know if that's the case anymore. But Intel used to be the like quintessential low tick, slow tick stock instrument that all of the researchers used. I don't know if that's still the case. I honestly don't go and look at liquidity in individual stocks very often, so, but you would definitely want to be looking for like really blue chip stocks, so things that have been around for a while, aren't in like a high growth space, and don't have an excessively high price, right? Because one of the issues, I really don't like this about our stock market, but this is a law, is that everything has to be priced out to cents. You can't have sub-cents. You can't force it higher than that, like to dollars. So the larger the higher the price is, probably the less suitable it would be for a really small spread. Do you know anyone that hedges on two different accounts? So I haven't spoken to anybody recently, but I've definitely spoken to people that do that. So basically, like what you would do is over on this one account, you would take a swing trade. Let's say that your swing trade is long, and then at spots, they would sell and play the pullbacks in the other account. The person that I'm thinking about, they actually they were doing this in oil, and there's like an interview with them out there somewhere. I think that they were doing it because they wanted to like they were concerned about the market following their trades, and so they felt that by doing it with two accounts and stuff that they could kind of obfuscate what their real position was. But I've had a lot of people come in and they want to do this sort of a thing where like they have both a long and a short in the same instrument, because there's some people out in the Forex industry that are kind of selling that as a feature right now, which is really unnecessary. If you just want to, you want to hit a range, like Like, say, if it gets above this, then I want to buy, and if it gets below this, I want to sell. Just have a one order cancels the other order set up. Because once you have multiple accounts, then you're considered a professional. You have to pay the $50 or $100 professional fee every month. Now, what do you mean by a no loss hedge strategy? Okay, so like, if I come over here and I buy the 10-year treasury in one account, and I go and I sell the 10-year treasury in the other account, then whatever I make in this account will be offset by whatever I make in this account. And all I've accomplished is giving two different brokers commissions. What would be the point in that? This is like the third or fourth person that's asked me a question like this in the past few months. So, and they were asking because of something that they had seen in Forex. So that's why I'm bringing that up. Like, if I buy and sell at the same exact price and close the buy once it hits and then wait for the retracement to cancel out the sell, well, then that would be the exact same thing as if you just waited to when you would have closed the one buy and sell it there until it comes back to where the sell supposedly is. Yes, I have. Which, again, is a Forex strategy. Yeah, but what you would want to do is an OCO, right? So an OCO is one order cancels the other. So what you're saying is, I'll set a buy somewhere and I'll set a sell somewhere, and whichever one gets touched first, I will go into the position. And when one of those orders gets filled, the other one gets automatically canceled. So that if there was, for instance, in volatility like this, let's say that I had come in here and I did a OCO over here at, 14 and 20, and then it would have gotten me short at 14, and then the 20 would have been canceled out, and then I'd be short and lose a ton of money. But so in this instance, it wouldn't have worked very well. Okay, but that's how OCO works. Did they breach the high there? Not quite. Not quite. There's a strat in Forex, all the rage right now in Forex Factory. Basically, the idea is to have multiple buys and sells opened until the price moves between them and you close all for profit. Yeah. So think of it like this, okay? I take a position at 16. I have a stop and I have a target. Let's say that my stop and my target is really small. My stop is 15.5 and my target is 16. Then what I'm essentially saying is, I think that the market will touch 17 and fill me before it will touch 16 and stop me out. Well, what's the probability of that? Well, if I have equal risk reward, theoretically, or a naive theoretically, it's 50-50, right? One tick this way, one tick this way. But it's actually, you have to consider the spread. Depending on how you got filled and so forth, it's not actually 50-50. Like, if I got long at 16 and I was able to do so as she goes, catching the edge, so that like as soon as I buy it there, there's a bid underneath me at 16, then it's a 50-50. Otherwise, it's more like 40-45% chance of winning with that, right? Okay. So that kind of sucks. So what do people do? So they come in and they say, oh, well, what if I only need to make 1 tick, but I can let it go 4 ticks against me, right? Like, so that's a 0.25 R factor is what we say. So your average winner divided by your average loser is your R factor. That would be a below 1 R factor. Okay. So if you have an R factor below 1, then you tend to get a really high win rate. So you can do a strategy like that, and it'll be like you'll win 80% of the time, but your losers are more impactful. Okay. So what does that do? That gives you a it gives you a more fat-tailed distribution. It does this to your, normally a distribution would be like this. Okay. Let me say here's break even. And if we're getting a complete 50-50, then some trades will win, some trades will lose. And every once in a while I get a really big winner, and every once in a while I get a really big loser. Okay. But what we're doing is we're having our target a lot closer. And so it kind of, if this is the center point, it kind of does this, where now we've kind of got more over here on the right side because we're getting more winners, but our losers are more impactful. So this left tail is longer, essentially. If I have like a bad losing streak, it's going to be 4 times larger than it would be with equal risk reward, right? Because my losers are 4 times bigger. Okay. Maybe that losing streak is less likely to happen, but I tell you what, it almost always happens. Okay. So having a 4-to-1 risk reward ratio, well, I have seen some people out there kind of like pushing that sort of a thing, and there are some people that are fooled by that, but most traders kind of understand that taking it's kind of better for you if your winners are larger than your losers. So that will mean that will mean you win less often, but it also means that your winners are more impactful. And so instead, you get a distribution that kind of looks like this, where you have a really far right tail, right? Or what's really preferable is that you just have something that has a lot more variance, okay, where that middle is a little bit wider. That way, instead of having results that go like this and then badoosh, right, you get results that are kind of more like this and just kind of consistently up, but with lots of variance. Okay. So anyways, what happens is, because everybody kind of knows that like 4-to-1 risk to reward ratio sort of a thing isn't a very good idea, people will find ways of reproducing it in other ways. And there can be advantages and disadvantages to doing that, right? For instance, with the 4-to-1, the big problem is you get this huge left tail. So one way of approaching this is using multiple contracts. So I can come in and I can say, I will take 3 contracts. And on one of those contracts, I'm only looking for 1 or 2 ticks. And then my stop is actually 4 ticks over here. And then when I've made a little bit of profit, if it does come back down to my stop area, I break even. And so a large portion of the time, I'm just breaking even. Some portion of the time, I get it where that one contract that, they get filled, and I'm able to get one contract that just runs. And so I still get a far right tail, right? And then every once in a while, there is a left tail as well, but it's less common. So that's, for instance, the Futures Trader 71 way of doing things. Multiple contracts, take sequential profits, try and let one contract run, right? You're doing the same kind of thing. There is a left tail to that. There is a situation where you get in and all 3 contracts get stopped out immediately and you take the maximum loss, and that could happen over and over and over again. There is a fat tail there, right? Okay. Another way of doing it, though, is kind of what you're talking about, where I say, I'm just going to trade this range and I'm going to have orders at the edges of this range. And I anticipate that there's going to be noise and it's going to just trade back and forth through here, right? Yeah, but it still has kind of the same problems, which is that there are fat tails, and the results can kind of be deceiving. It'll seem like it's working most of the time, and then you'll get one market that is just really trendy, and you'll stop out every time, and then you'll stop trading the strategy probably after that, right? So that's what that's all about, and why I'm kind of a little bit like, because from my perspective, I would rather just, know whether it's going up or down. I think in this case, it was way too illiquid. If I was trading ZN, I might have been able to have caught a part of that. I probably could have bought like at 28 here in the treasury, in the main treasury. I guess I should have tried doing that. But I was looking over here in the micros and the liquidity was just shot. But, in that situation, I have a really good idea of which direction it's going. And so I actually have like a predictive edge, essentially. Okay, so Lucas, you had a question. What's your question? Oh, there it goes. There's a new high. Oh, no. It was still 19. Oh, no. It was by one tick. Okay, you shared some correlation studies yesterday, and some people on Reddit. Wait, where did you post on Reddit about that? Okay, but CADF stands for Calculate Augmented Dickey-Fuller. So basically, that where's that data series? Where's the picture that I left? Here it is, right here. Okay, so this correlation is NinjaTrader's correlation indicator, and it's basically just saying over the last 50 bars, how correlated are they? Okay. Any correlation over 0.5 is potentially tradable, but is not really statistically significant until you get to like 0.7, 0.8. Okay, but you can see here very clearly there are points where the S&P 500 and the Japanese yen are extremely correlated. And if we went down into like a minute by minute basis, you would be able to see similar things. So there are periods where they are just extremely correlated, right? Which platform? The screenshot that I'm showing you is from NinjaTrader. Now, this one down at the bottom, Calculate Augmented Dickey-Fuller. This is an indicator that I converted from a previous version of NinjaTrader, but I have not included in any of my suites because it is dependent on a framework. Essentially, there's a framework that you have to use this indicator that it's kind of makes it difficult to distribute. Okay. But yes, actually, that's exactly it. Is CADF measures whether they are co-integrated. Now, in all honesty, I don't completely understand a lot about co-integration. I'm actually kind of like, I studied it for a while and I really knew, and at the moment, I don't think I could describe to you very well what it means when two things are co-integrated. But it's a similar thing to correlation. Okay, it kind of says that like this instrument is within a certain range of this instrument, something like that, right? Okay, so this augmented Dickey-Fuller test basically is a way of statistically testing if two things are co-integrated, and my understanding of it is that the smaller the number that you get out of the Dickey-Fuller test, the more likely they are that they are co-integrated. And this little green line in the indicator represents the point at which it's proven that they're co-integrated. Yeah, so essentially the difference between them is time. So this suggests that they are not co-integrated. There is a point where it gets close, but this test is not able to prove that they're co-integrated. So that's what that means. They're very correlated. They're kind of almost co-integrated, but not really. Co-integration is a stricter test over time. You can have very high correlation on, say, 3 to 5 days, but almost no correlation or co-integration over 6 months. Sure. So the thing that I find very interesting and useful about the correlation between the Japanese yen in the US Treasury is that we know why they're correlated, right? Because you might just see two instruments and say, hey, these things, they tend to move together, and I don't really know why. And I'm always very suspicious of when I find a statistical abnormality and there's not really a very good explanation for it, right? Because that I may just be random chance, right? But the reason why the Treasury is so correlated to the Japanese yen is because Japan is the largest buyer of bonds, right? So based on what's going on in the Japanese yen affects how much money there will be available out there from Japan to come in and buy treasuries. And that's why they tend to be very, very correlated. And because of that, we can also kind of predict when it is more or less likely to be correlated, right? Like, I don't know if in this situation they're going to be correlated, but how much does the Japanese yen care about the CPI number apart from, it affects that treasury market, it's going to affect us, versus like if something is actively going on in Japan. I don't feel like I'm making my argument here very good, but there could be a macroeconomic force that affects the 10-year treasury and the Japanese yen differently, and then I would see that correlation reduce. Whereas if it has something to do with the interest rate that's available or the exchange rate with the Japanese yen, then they tend to be really correlated. You have to account for autocorrelation and heteroscedasticity. Yeah. Very much so. That's one of those things where it's like, I haven't quite gotten into it the way that I want. And this is where taking everything out of NinjaTrader is kind of useful, because in NinjaTrader 8, you're limited to a certain version of the .NET framework, and a lot of the more statistical frameworks out there, libraries out there that you might want to use, might not be compatible with your version of NinjaTrader, and they're a little bit more difficult to use. Whereas if I can take it outside of NinjaTrader and then put the same data into, say, Python, which I think is what was it, GUI? Yeah, it was GUI that was trying to export the data, right? Then you can go and you can use Python or R and use their libraries, and some of these things are just like really simple to do. But I haven't done that, because there's more than one way to test for co-integration and all of this stuff. But this is getting into the what is the term? Statistical arbitrage. This is the world of statistical arbitrage I don't understand as well as I would like. Yes. So that's what that was. That's what that was about. But it's kind of one of those things that's like, well, the Japanese yen is very correlated to ZN. It's quite well known. No, I didn't trade the news release. You know, so when I actually, well, actually, technically I did. So what did I do? I came over here and I looked in the micros and I could see that the liquidity was like absolute BS. So I started holding offers out there to see if anybody was dumb enough to hit into me, but it didn't happen. So I kind of traded it, and then the spread came back in. I suppose I had the opportunity to trade it at 4.5 and would have made money, would have made 20 bucks on it, but that would have been, I actually probably would have had a lot of adverse excursion on that. So now that it's 30 minutes past, we could potentially try trading it. But let's go back to the beginning. Why would you test for co-integration in the first place? There are already known instruments that are co-integrated. Oh, just because the question was about the Japanese yen, and I felt that if I'm going to prove to him that it's correlated, I might as well also include what we know about it being co-integrated. That it's it's close, but there was not enough evidence to support the idea that it's co-integrated. Mostly I put it in there so that you would ask me that question. Well, it's not about proving the correlation, but rather about proving the feasibility of trading said correlation. Well, yeah. I mean, but that's not something that I can quantitatively prove, right? What I can prove is they're correlated, but also that the Treasury is very thick instrument. So, if you were a hedge fund, the possibility of doing statistical arbitrage on 6J versus ZN, really, really good place to be. But only if you were confident that you're faster than everybody else, right? 10-year Treasury is thick enough that it's pretty hard to make money off of a correlation like that. But yesterday we did it. For some reason, the Treasuries just did not buy up very aggressively when the Japanese yen was pushing up very aggressively. And so that provided an opportunity for me to get in and make a good $26, $30. So question, are the dollar index and 6C and 6J correlated or co-integrated? Oh, that's a very good question. So based on what I understand about what co-integration is and what the dollar index is, I would anticipate that the 6C and the 6J are co-integrated with the dollar index, because the dollar index basically includes the 6J plus these other things. So we should see that the 6J, that the dollar generally follows the 6J within like a range. Is that? I'm not coming up with the right words to explain a co-integration. It's kind of like, if this instrument goes up, this instrument will go up too, but this instrument kind of trades within a range around this one. And I forget why looking for co-integration versus correlation was like a significant thing. Wow, they're pushing a little bit further here. I'm quite shocked. Well, what I'm quite shocked is to see this at 4.65 all of a sudden. if you wanted to trade that, you'd have to account for other instruments included in the dollar index, for sure. I mean, that's a thing that we could do, though, is we could use our synthetic dollar index and then turn around and go to like the small exchange where they have dollar index futures, and try and trade that, for instance. Although my dollar is a little bit different because it's based on the futures, so you would have to account for that. That's another thing on the list. You know what? I'm just so ADHD and there's so many different things to look into and I don't have any time to look into them. And I don't write it all down. But that's another thing that that is kind of on the list of things to do is to make something an indicator that kind of estimates the basis. Basically says to me, based on how much time is left in the contract and the short-term interest rate, what should the difference in basis between the cash and the futures be? Based on a really simple, oversimplified model that only takes into account the cost of borrowing over until the end of the contract. You trade all 6 of them against dollar index futures, really? Okay. I kind of feel like that kind of arbitrage would be difficult to pull off for anything on the CME, but maybe I'm wrong. The fact that the dollar index has fixed weights, you don't really need to account for others much. Yeah, that's true. That's true. I really like my dollar index because I can kind of see like key levels, and there does appear to me to be kind of like some technical stuff that I might be able to glean from it. But if you just have the Japanese yen and the euro up, you could probably do it as just fine. They have different central bank decision dates, interest rates, and that affects their respective carries. You can play. Oh, okay. Well, see, you're getting too sophisticated for me, right? I need to make a model where I can see estimating the basis difference just based on the contract end and the interest rate, and seeing how close that model is to the actual market before I, and understanding that before I start including other more sophisticated stuff like, like incoming central bank decisions and stuff like that. But those are all really good points. So I'm just thinking here, where was we? Oh yes, it was at 19. I'm kind of wondering what is the possibility of it falling back into this range or not, or is it going to just trend all day? Because when I look at ZB, I can see pretty autocorrelated movement to the upside, but I am seeing the volume shift to selling in ZB, so I would also point out that the yield curve steepened substantially off of this, so very strongly suggesting that the short-term rates are changing because of their anticipation of how this will affect Fed policy, and the longer-term rates not being affected quite as much. What do you mean it's pushing higher? With what I'm saying about the ZB? So if I look at ZB here, pretty clearly up to the upside, right? But when I look at cumulative delta, I'm starting to see it flip a little bit. So now, because we know that the spread is up, that means buy 5-year, sell 30-year. So this selling right here may be from spread activity. But it's the first kind of shift in the flows that I've seen since the news. So it is something to keep in mind, keep an eye on. That may be a hint that the treasuries are about to moderate a little bit. And perhaps it makes sense to try and catch like this range now. Why would oil trade higher or lower in CPI news? Okay, good question. So oil is somewhat economically sensitive. So if traders anticipate that the economy will be stronger in the future because interest rates are going to be coming off, then that means more people to buy oil, and so oil moves up. It's kind of, this is, you know, when it comes to CPI and frankly Fed day too, it kind of turns into buy or sell all the things, right? If whatever the thing that whatever the piece of news that we get, if it suggests that interest rates are going to be higher in the future, then everything sells. Treasuries sell, and then everything else sells because of those higher rates, and vice versa. You know, we buy, you know, if inflation was lower than anticipated, we buy the treasuries, we buy the ES, we buy basically everything. I mean, like look at my market analyzer in the bottom right corner of the screen there. Almost everything except for soybeans and natural gas are positive right now. Why? Because that's more money coming into the market to buy things. Or that's more money will be available in the market to buy things. So that's the flows, right? So money is going to come out of the dollar and into all of these things. So it's on speculation of rates getting cut and the economy booming, thus oil price higher on. Yes, I wouldn't call it booming. But anticipation that demand for oil will be better than they previously anticipated because of interest rates backing off. Because to Akshay's point right here, he says, why would rates get cut if the economy is booming? Well, the market was pricing in that the Federal Reserve could start trying to normalize interest rates as early as June or July, I believe. And the lower inflation is, the more that change gets pulled towards us. Now, that doesn't mean that the economy will be booming. But, you know, take into account the context, right? We're not at all-time highs yet. And this is just kind of suggests that, yeah, we're going to get a soft landing. So I think that growth will still be difficult. But, you know, the traders are basically saying, we're going to get this sort of a thing instead of this sort of a thing. Kaddish. Right? But it is just one data point. This is like, what, 2 in a row now that have been pretty mild and very encouraging. So I am right now, I am kind of the mind that interest rates rising is doing its job. And it's just that it's really lagged, and a lot of the data is kind of fuzzy and not giving us a very good perspective on what's going on. But I'm seeing companies lay people off. It's not anything that I think would necessarily lead to a recession, but I do see growth moderating considerably. And so I think that it's very likely that within the next year that the Federal Reserve is able to normalize interest rates and bring them back down. But it depends on how crazy the S&P 500 goes with this, right? Because if this just turns into an insane rally where we're moving up 50 points every day and we're already headed to the new all-time highs, then that's gonna have to, push it out essentially. U.S. government is the biggest winner in higher crude prices, not so much the people. Well, except for that we emptied the SPR, and we'll have to refill the SPR at a higher price. So government's not really going to be a winner there. There you go. Saudi Arabia is the biggest winner. Not my area of expertise, though. Not my area of expertise. So, I said here, we are getting some signs of it moderating. I'm seeing a little bit of a liquidity hole at 22 half at the moment. You're definitely seeing it right there. There's a lot of trade going through, but there's not very much on bid or offer. So does that mean that we could moderate a little bit and move within this range? Well, they still look kind of high flying. So I don't know if it actually will come back. I suppose there is very much a possibility that they just keep selling. Let's get in then. What, get in oil? Maybe I should be buying oil. I don't know. I have my big list of stocks that I'm working on, and I'm not ready to make a decision on what I want to do with that extra 1,000 I got sitting in there. So energy stock might be a good choice though. Seeing oil below $80, I think is, if we think that oil prices are going to go higher in the future. With the way things are going in Israel, I think there's still a chance that we could see this break out into a wider conflict. At the very least, I think there's a good chance that this extends to a war with Hezbollah. So that might push oil prices higher. Kind of, if I was taking a trade here in the micros, I would be fighting for ticks. This one, over the last, I'd say 20 minutes, I might have been able to have made 10 ticks on it. So, but at the moment, it really is kind of showing behavior that could be a trend day. It could be a trend day. It is still, in my opinion, quite a bit more volatility than I anticipated, even on a good print. So, because what is ES at now? Wow, RTY is up 3.43. Good grief. ES is 1.34, and that's before the market has even opened up. Well, let's come and read Zero Hedge's synopsis of the CPI. Good morning, Rodrigo. What is the best risk reward for scalping? Well, I would say I prefer an equal risk reward. I think that an equal risk reward gives you the best feedback about what the market is doing and how you're performing. When you start to shift away from that equal risk reward, it becomes harder for you to see what's going on. Yeah, 1-to-1. As if your stop is larger than your target, then you're going to win most of the time and you're not going to see your flaws. And versus if your target is much further away than your stop, that's not a bad way to go, but you kind of have to stick it out. You're going to lose a lot. Where was that block buy at? 23.5. There was a block buy. Oh, that's interesting because it happened so fast that my DOM doesn't even show it anymore. I've been doing 1-to-3. So I'm not saying that those other kinds of risk reward structures can't work. But I am saying if you're doing discretionary scalping, you really want to have that feedback from the market to tell you how you're doing, especially if you're just starting out. And so 1-to-1 is the most appropriate. And kind of what you can do is the way that I would approach it is, if you get a strategy that is really well proven, right? Like you have a lot of statistical data that's well beyond the margin of error, including fat tails, to suggest that the strategy is profitable over like a 5-year time period, let's say. And you've been trading it for a while and you've had success with it, then you can start to do things like adding on risk. And so that's when you could increase the size of the stop that you're using. And you're starting to use an R factor that's below 1. Yeah, getting funded might be another one. Oh, okay, you figured it out, Jiwi. Cool. That's my issue when I get hit. I get hit big. Yeah, so there's this interesting deception in it all. So we typically think of it as trade by trade, right? So if I have a risk reward ratio of my stop is 2 and my target is 1, so my R factor is 0.5, then I'm going to win most of the time, but when I lose, those losers are twice as big. But they can only be twice, if I was doing it here in ZN, my loser would be at max 31, right? So no big deal. So then you would think if I'm drawing this diagram here, right? It's like I can here's 1 tick and here's 1 tick and here's 0, right? Then I get a bunch of winners that are like this, and I get a bunch of losers that are like this. And so my distribution is actually like this, right? That's what you think your distribution is. Well, I suppose if you're just looking at individual trades, that's true. But when you start to look at it in terms of daily profit and loss, then you're going to be taking multiple trades, and then you start to get this sort of a thing again, right? And what usually happens to you is, there's something about that one day where the strategy just doesn't work very well, and then you lose, and you lose so much when it happens, and there's your far left tail, right? That's what usually happens to people. And it's like by the time you realize it and need to stop trading, it's too late. So that kind of a strategy really makes more sense for an automated quant firm kind of strategy, right? I don't think it works very well for a discretionary trader because, again, it kind of deceives you. And then what will happen is you get so full of yourself that when the time to not trade that comes, you're just not going to know it. Right? Because at that point, your entire strategy, it hinges on you being able to recognize that you're in a tail event and not trading it. And if you're so used to winning, you're just not going to see that. So it's better to get something that has a little bit more variance in it so that it keeps you in line with the market. It you know, it keeps you humble, and it gives you that feedback to really know what's going on. Brando's saying this is likely or the market will protect today on CPI. And you must have been just talking about like where the single prints stopped. I should come back here. At what point are we like, okay, well, we're well above where we were on the 3rd when non-farms happened. But here at 25 is kind of that spot. So that might be a little bit why they like this area. If I go further back. No, I actually don't really see a whole lot of really key points until much higher. Until much further away. Maybe 28. There's this swing low. But there's like that 100-day moving average above us. You know, that's pretty far away. Just take trades that are winners thing. Yeah. So how many ticks per trade would be okay? Okay, so for that, I would study volatility, and I would ask yourself what are kind of a trade are you fundamentally going for? So if I come in and I look at what is the range of an average bar of a 5-minute bar, let's say, here in the treasuries, you're going to get something like, you know, of course, we stop at 0 because you can't have a negative range, right? And you're going to see it's going to come up to like 4 ticks is like the most, and then it goes like this. Right. So what that means is in the treasuries, if you are getting less than 4 ticks, it's basically noise. You're basically picking up on noise. But if you're kind of trying to take advantage of that noise, then a target of less than 4 makes sense. And on the split side, you might want your stop to be 4 ticks or more, because you don't want the random noise to be what stops you out, right? That's where this low R factor strategies, there is an advantage in that I can see what the volatility is, and I can say make my target be 2 ticks and my stop be 6 ticks or something like that, and I'm gonna win a lot. As long as I have something that is really good at predicting that we're going to be range bound in that time period. Well, been an hour now. I haven't really seen any behavior in here that I thought was odd or that like really made me want to take a trade. It's just been like pretty comfortably going long this whole time. So I feel like it's probably like way too late to take a trade, but I shouldn't be surprised that I could have taken a trade at 4.5 and made like 40 bucks on it. But I don't want to take that trade just because of how much volatility I know there's going to be, right? Oh man, my nose itches so bad. Let me scratch my nose here. I usually try to do 4 ticks on 5 minutes, but I've been doing a 1.3 on average. I will quite often come in here and say, oh, here's a spot where I think I could make a tick. So I might want to watch this 28 here. Kind of looks a little suspicious. They're kind of setting up a level break, and I suppose that given what we've had today, that would be a reasonable trade to take, because the as she goes usually works out. But this one is being a little sketched. They're kind of running into a wall here. Like a lot is traded at 27.5 and hardly any is traded at 28. TLT at 90, call sellers are in trouble. Oh, I bet. Man. It was at 90 where we had seen a lot, and we're kind of like, I don't know if they're going to get those ones, huh? Can you imagine if you had bought the 90s yesterday? Because they were only worth like 10 cents, right? Oh, let's come back and look at that. What are they worth now? I don't know. The 90s might still be like not making money. TLT. Oh, they're 87.79. Oh, I'm not logged in, it says. That's weird. It just doesn't reflect whether you're logged in or not very well. Okay, so we were looking at 90s, and oh yeah, that's not bad, because you were asking 10 cents for them yesterday, essentially. Was it yesterday that we looked at it, or the day before? I can't recall, but it must have been yesterday. And now it's 83 cents. So I don't know about on expiration day, on Friday. But if you were just taking your profits today, that was a 4-to-1. That was good. So that's pretty crazy that we've had a couple of situations here where you made big money on TLT, and a lot of people were trading it too. So probably a lot of people made money on those. Oh, it looks like maybe they did finally take 28. I can see a lot of liquidity up there above us, but let's see. Maybe now that I'm doing some contracts here, this will be like, it'll just careen down. You're just waiting for me to take it, huh? I know. I think it'll be really hard for them to close the week at above 90, though, or much above 90. Oh, come on. Come on. A little better. Let's get that bid above 1,000. Nope. Oh, that's not too encouraging. Got a big order at 26, though. Okay. So this is because what I'm doing right now is kind of one of those, right? I'm trying to just get a few little contracts and I'm giving it like lots of room on the downside, right? So this is not, this is kind of degenerate. That was, though, it's kind of funny. Just as soon as I start trying to do something like that, you got the biggest sell that you've had all session. So I'm going to bail on that. That's outside of what I was anticipating. So I'm going to just mark that one as a loss. It was on the sim account, so... I'm a little concerned. I could see this, like if we were to get like a really strong pullback, I think that for it to completely retrace the move would be extremely unlikely. But like, I could see it pulling back all the way to 08.5 is one that we've seen a few times. So... I don't know if I feel confident on taking a short like that. I could try doing something here with my live account now that we're like now based on the timing, because I think that you probably will start to see bigger players start to come and make their moves now, and see that gold just took another little bit of a leg higher, as did oil, and the S&P 500, of course, open just wants to continue moving up. We might see something where as the S&P 500 continues to go up, the treasuries sell a little bit. My thoughts concerning your last, that was a pretty bad trade, yeah. You were the chosen one. No, that was not the chosen one. That was not the chosen one. That was just screwing around. It's actually, doing that one there kind of ends up being a good test for the market, right? Because we were getting a level break set up and it kind of went, and so I was looking for it to just continue through, and then it failed. So if it's not doing the level break every time, that gives me considerable reason to believe that today will not be a trend day. It will be a double distribution day, or that this will retrace considerably. So if I were to go long here at 24, I don't think I should be expecting a whole lot above, I would probably be taking my profit at 27 or before 27. And I wouldn't be expecting it to make new highs. That might be asking too much. They are kind of hinting they want to go back up, though. Oh, we got Fed Sparkin speaking at the moment. Oh, yes, he's been speaking for the last hour and 15 minutes, so. Since I included my second monitor, I haven't traded at all? Really? Okay. That is kind of curious, I guess. I don't know if we've necessarily been getting like the most amazing market action the last 2 weeks, though, so it's... My shirt's kind of all messed up a little bit. Should fix that. Feel that I want to have everything nailed down before passing the next evaluation. I don't want to find myself funded again and losing the account. Well, was it that devastating to you? I feel like that this time around that you kind of know a little bit better how it tends to go and so forth. And so if you lose the account again, it shouldn't be as devastating, right? Like, I think that right now you can approach it like I probably have a good chance of getting funded and holding the account for a little while, and so I might as well take advantage of it while I'm trying to nail things down. And if I blow the account, that's okay. That's not like a huge loss on my side, you know? It's not emotionally devastating, it's just pointless. Well, yeah, but isn't it just pointless to just sit here and not trade money at all? But I suppose that the alternative is to go into just funding your own account that's really small. I think it's the possibility for you to fund your own account that is kind of the thing that makes it, you know, whether you want to do a combine or not. I think that most people would be better served by trading their own account. Here's 4,500 in the S&P 500. They're kind of playing a little bit of games with it here now. But I am seeing kind of some of this before she goes absorption, so I'm going to bet they will trade it through it. Is there a difference between evals and funded accounts? It depends very heavily on which prop firm or whatever you want to call it you're with. I think it was only one of them that was actually turned out to not be a real account once you got funded. I could be wrong, but I think that it was only one or two of them that, you know, once they got funded, they found out that it was actually a fake one. And I don't even remember which one it was. I think it was Apex, but I don't really remember. But there are some that we know for sure are live once you get funded. As you're thinking in terms of trading micros, well, but you can't start well, I guess you don't want to scalp ZN, do you? You want to scalp NQ, then that's a different thing because you probably need like $10,000 or $20,000 to do it. I mean, you can kind of scalp these. I wouldn't be scalping one tick, but you could come over here and do micros and just go for 5 ticks. And There you go. You could scalp UB. So, I don't remember who it was. I think it was who was Daniel using? You know what I'm talking about? Here, let me look it up. Oh, yeah, it was Top Step. So, Top Step Trader recently had adjusted their rules that the high watermark is only created once you close a position. So this whole thing where like you make $2,000 and then it comes all the way back before you close the trade, that doesn't count against your drawdown. Only if you made $2,000 and closed the position and then opened a new position and lost 2,000. Not well trained in UBZB. Would definitely be a different game because you're kind of watching the other treasuries and trying to scalp based off of those and the yield curve and stuff. Would be a different game. But at the same time, I still kind of have to question how much true informational edge can be gleaned from equity index futures. Man, look, there's another basis point down. Yeah, UB is just a drunk CV. I like it. That's exactly it. We've definitely had people here on the stream that did well with it for a while at least. Getting a little bit of clicky behavior. So the S&P 500 is trading a lot of volume here around this 4,500 area. Oh, wait, what did you think that we said? UB is the most volatile of them all for sure. Definitely is. And the amount of resting liquidity is a lot less. So if you were trying to do really quick scalps, it might make more sense to try and do it in UB. But there is a little bit more risk involved in it too, because it moves, you know? Yeah. I'd say it still is the most volatile. You could also try TN, because TN is kind of like ZN, but a little bit less liquidity. What do you think? Are they going to continue pushing? Well, so there's this little area on the volume profile that I'm sure a lot of volume profile traders are going to be looking at, right? Where they had just kind of careened through. This was when we formed that initial high, and then when we broke out from that high, we crossed this area very quickly. So some people might be looking for it to go across this very quickly again. Other people might be looking for this 21.5 to hold and bounce. I don't think that such levels are very indicative of what is going to happen, so I don't know. But it's kind of interesting to watch, don't you think? I'm not sure why anyone who is not moving serious size would trade ZN instead of TN, honestly. Well, that's because you want a thin instrument. I think the reason why you want to come over here, so it has to do with how much are you relying on an informational edge, right? So if you're an algorithm and you don't have a effing clue what's going on because you're a robot. You only know what you've been programmed with, right? Then having a really thin instrument can kind of be advantageous to you to some extent, right? If you are Seth and the informational advantages that you have is basically all you've got, then you want to go to a thick instrument for two reasons. One is a thick instrument is less likely to do something dumb for no reason, right? Like ZN usually doesn't move unless there's a good reason. And the more liquid the market is, the more likely it is that the market is going to go in accordance with my predicted flows. And then the other side of that is that we know that the larger an instrument is, the more kind of predictive signals we are able to get out of it. This is an empirical finding that they found in many studies. So basically, because the instrument is so big, you're more likely to have different funds and so forth regularly doing something on it that you could potentially predict and use. So that's why a lot of hedge funds and banks and so forth like that are trying to predict the order flow really like to trade in ZN. That's why, it's so thick, but it continues to be like the most popular instrument. Having traded euro dollars, I say thicker instruments do in fact move without heads or tails almost always. Sometimes you will still get moves that seem a little bizarre. That's true. But if I can get if I get 10 of them in this instrument and 7 of them in this instrument, that makes a significant difference to you, right? Because the worst thing is when you're in a trade that's actually a really good trade, but there's some sort of just bizarre sell for no apparent reason the other way first. That's... Okay, so do you see right there at 21.5? There's definitely somebody making the volume profile trade. So watch ZN and trade TN? Yeah, you totally could. I think if I was going to do a trade like that, though, I would probably need to use alligators, right? I would have to be I'm watching the two of them, and, well, what you can do is, let's say that we're in a period where I know that we're getting trend, right? This is when... I got to hit into it with a market order or there's no way I'm going to get filled, right? But then you don't know if you're going to get filled, if it's going to keep going or whatever the deal is, right? But when that happens, you can leave the alligators behind, right? And you'd get 1,000 in the queue or whatever. Pretty good chance of getting filled. So then you can wait. Market comes back there and you see... this instrument ticked down and this one hasn't yet. Hit into it and hope that you get the quick fill on the other side. That might work. It would be, I tell you what, that would be a lot of work and extremely tedious for very minimal reward, but you might be able to make that one work. But I guess that just kind of comes back to what are you actually trying to accomplish, right? If what you're actually trying to accomplish is max capital gain, then just stick your money in an index fund. But if you want to trade and you just want to be able to keep trading, which is basically me, then I think you take the informational approach. And if there's something about the scalping that you really, really like, that it's got to be scalping, then you probably want to go to a thin instrument. In fact, I wouldn't just go to a thin instrument. I would go to like a thin exchange. I would go like try and provide liquidity on the small exchange, or, move to Singapore or something like that, But you're assuming tick for tick movement in both instruments. Do they do that? I would say between those two, TN and ZN, they're for the most part tick for tick, yes. Obviously, there's going to be small, subtle differences between them, but they are so closely correlated, it's crazy. And like Akshay was saying, there was a time where the baskets were like almost exactly equal to each other, and so... Well, they're not locked, that's true. But I would say that the amount that they're correlated is probably right about as much as ES and MES are. Singapore has more liquidity than Japan, but what are you talking about? The whole Chinese liquidity comes over there? Yeah, but it's a much... So my understanding is, I've never traded in Singapore, so I don't really know, but my understanding is that Singapore is kind of where the most emerging markets are, and a lot of these guys that were kind of doing discretionary scalping sort of things, like Paul Rotter, went over to Singapore. That what they were doing didn't really work in the European or US markets anymore, and so they were moving over to the Asian markets in Singapore. Or at least trading from Singapore. Maybe the markets that they were trading on aren't based in Singapore. Or you know what? Where would probably be a good place to get involved is India, right? Because we anticipate India to overtake China as the largest country and the largest consumer in the world, and there's still a lot of economic development to happen in their stocks. Maybe India is a good place to go and trade. You say Singapore was traditionally a venue arbitrage? Okay. Now it looks like we kind of pulled back a little bit here. You say the Flipper went out of business when they started prosecuting spoofing? I mean, has there been a story about that? Has he talked about it? It would be interesting. I don't trust this, India. The way that things have gone in politically in India don't really make a whole lot of sense to me, but that's, I think, because I don't really know everything. So I've met a lot of Indian people, but they were all, people that I worked with at Goldman and stuff like that. So for the most part, they're the rich Indians. I mean, there was people from all different castes and stuff, but most of them were rich. So I don't think that I get a very good hand. And even then, you're talking about people that were willing to come over here and work for a big bank and things like that. So I don't think that I have a very good handle on what the, how people in India are kind of thinking. I know that they're freedom-loving people, but they have not necessarily been completely friendly to the United States as of late with their politics, which I found very disappointing. But I still think that in the long run, that India could be a good place to invest. Just based on the demographics and everything, right? I see the VIX coming up and the market is still rallying. Does that... Okay, so what you're seeing happen right now is that the market is experiencing more volatility than it was anticipating. So there's kind of like, you have a number, this is a CPI number, we're expecting it to be spot 3, right? But then there's also kind of like a margin of error. Like, how likely do you think it is that the market will actually be right on the consensus expectation? And in this situation, all of the analysts pretty much expected it to be right there on 0.3. Okay, so when we missed that at 0.2, that was a much larger surprise to the market than it normally would be. And the options were not pricing very much volatility for this CPI, and then we had what happened, and it's resulted in more volatility. So what's happening is now all of these options market makers and stuff are having to really, really aggressively adjust their positions to avoid losing too much money from it. Does that make sense? So because there was an explosion in volatility, it was more than we expect, and that's where we get the S&P 500 goes up and the VIX goes up. Because it is a measure of volatility after all, even though volatility tends to go up when the markets are moving down. That's not always true. You can have markets that move down and volatility contracts, and you can have markets that move up and volatility expands. And those markets are less common, but they do happen. And today is one of them. I'm rather we built a much better relationship with our neighbors down south in Mexico. You know, I kind of feel like that the relationship there isn't as good as it could be because it's kind of advantageous to a certain segment of politicians for it to be like that, right? There's some politicians that on the right that I think kind of benefit from having an adversarial relationship with our friends down south, and then there's this other segment on the far left that kind of benefit from us just not having a very close relationship with them, because ultimately they just want the border to remain open. So we were kind of starting to find a good middle ground where Donald Trump and his administration worked pretty well together with the government in Mexico to get a deal and everything that basically solved the immigration problem, and then Joe Biden threw it in the trash bin. But I'm just saying, like, the larger thing I'm talking about is demographics are that India is likely to overtake China as the most populous nation and the largest consumer. So it makes sense to invest in India. Just like it made sense to invest in China many years ago. Back when I was, just coming out of high school. So you're probably going to see some crazy growth in India, and you're probably going to see a large number of people come out of poverty in India. And that's even if they continue to have a kind of less Western-friendly political leaders. So we were talking about Paul Rotter and the spoofing and stuff. I mean, you might be right that maybe the spoofing is just not. They just don't make him money anymore. I tell you that I see like real spoofing is a lot less common in the treasuries than it used to be. And there was a couple of months ago when we saw it come back for like a few weeks, and then it almost immediately disappeared again. So it seems to me that they have clamped down on it, and I think they've pretty effectively killed it for the most part. And everybody was super skeptical that would never go away. Of course, it'll always happen from time to time, but it's just not nearly as common as it was when we started doing this. Which I think is actually, it's kind of helps our trading a little bit. I think so. Well, Oh, we still got a good 50 minutes here. I've been keeping an eye on this, but it's not moving a whole lot in the 10-year now. So I'm kind of skeptical about whether there's enough flow out there for us to really catch a good trade now. I think maybe, do you think I should have been more aggressive? So when we were trading this, there was like a spread between 4.525 and 5. And I said, well, I'm not going to hit into those guys at 5. That would be crazy. So I started putting offers at, and it was very quickly at 5, and then the spread came in. So then that would be second opportunity for me to go short at 4.5. But I said, well, it's pretty volatile. It could still come back quite a bit on me. And it did. In fact, I think that they came all the way back up to that 4.525 again. Now, if I was somehow able to see that 4.525 is kind of like about as high as they could get and traded there, that would have been awesome. But I don't think that there's any way that I would have seen that. And then I guess again there was a 4.5, but it was still like I was too scared. So do you think at that point I should have taken the trade and I could have maybe made $40 on it? Or was I right to just be a pussy? Okay, I don't think I do. I don't think I do realize why India's political establishments have been skeptical about the US. France and India have gotten along just fine always. Well, it's okay. So it's not like I would expect them to just be completely with the United States on everything and all of that sort of a thing. But what bothers me is that the world is kind of bifurcating, and you've got the United States access and all of its allies, and you've got the Russian-China access. And India has been aligning itself with the Russia-China one over the United States, when I would have anticipated that they would be a strong ally with the United States. And I don't understand that. Like, I gotta understand being skeptical of the United States and not being with them on everything, but allying yourself with Russia and China instead does not really make a whole lot of sense to me. Yeah, both because India and China kind of hate each other. They're more closely aligned. But not only that, but I just feel like that value-wise, like the impression that I've gotten from every Indian person that I've met is that they are a freedom-loving people. Like, they believe very strongly in Constitution and constitutional rights and in the independence of their nation and the founding of their nation. You know, like, we would always be there for their, they would always put on a show when they have like their equivalent of Independence Day and everything. Like, they seemed very, very proud of that. And so I just don't see how a nation with those values could possibly align itself with the Russia-China axis, which is basically contrary to all of those values, you know? Just doesn't make sense. And I guess I've just kind of chalked it up to, well, it's just that one political leader is maybe a little bit crazy. You wait a few years and that different party will be in power and maybe it will kind of switch back. But I'm kind of like not so sure anymore. Then read about India objecting to the U.S. why they are arming Pakistan when the U.S. knows those weapons are being sent to terrorists. Is the U.S. really, quote-unquote, arming Pakistan? I guess that we do give them foreign aid, don't we? Most of the people who were college students during Nixon threatening invasion are now in politics. Wait, why was Nixon threatening to invade India? That's kind of funny. Well, yeah, but that's what foreign aid ends up being, right? Foreign aid is basically taking money from poor people in rich countries and giving it to rich people in poor countries. And it usually involves the transfer of weapons. Weapons or money that will be spent on weapons. Yeah. Because believe me, when they gunned down Osama bin Laden, and we found out that Osama bin Laden had been right next to the Pakistan military academy there was a lot of question about, how much help we had been giving Pakistan for sure. I know. So here's something that I have learned about international politics that you really have to keep in mind to understand the United States. Particularly the intelligence agencies and that sort of a thing, okay? The FBI and the CIA and all this, right? They don't really give a crap what you think is moral or amoral or whatever. They do whatever it takes to protect the nation's interests, right? So if there's another country and there's some political instability in that country, okay, and that country is about to be overthrown, okay, even if it's like a legitimately elected and all of these sorts of things, right? So the argument is, this is a democratically elected regime. That should stay, right? Even if it's like a socialist nation, right? You would expect the United States to support them even if they're social because they were democratically elected, right? But if the United States knows that a coup is about to go down, they will almost always support the coup because they want to have a close relationship with whoever takes over, right? And so what you'll find is like almost any time that there's been like a coup in South America, that the CIA helped them. I wouldn't necessarily say that the CIA like made it happen. There definitely are some instances where that happened, but it's kind of more like it was going to happen anyways, and then the CIA just kind of jumps on board, and that really snowballs it, right? Because again, they don't care about like what's more. They just do whatever is in the nation's best interest, regardless of. It's really quite a psychopath way of approaching the world, but from their perspective, that's what you have to do to protect a nation's interest in a dangerous world, right? So when stuff like that happens, I wouldn't take it personally. I guess. Pakistan's help is based on the fact that it's a nuclear state, but also a faltering one. Yeah, well, and in all seriousness, I would rather Pakistan be a friend than a foe. Because if Pakistan became straight up anti-American, allies itself with Iran, etc., that would cause a lot of problems for sure. Yeah, that's right. They're talking about the dispute they have with China. Well, you do something that harms other countries' interests and you want that country to be your friend. Well, I think that kind of part of the strategy is you should want to be the United States friend because it's a lot better. You know, if you're a really super pro United States regime and you bend over backwards to be the United States friend all the time, then the CIA is very unlikely to try and organize a coup, you know? I agree it's messed up, but I would still argue that India is better off allying itself with the United States than it is allying itself with Russia. That's all I'm saying. obviously I don't approach the world the same way that the United States does, right? Like my take is you should win, but you should win within the rules. I think that if you have to break all of the rules to win, then what's the point of even winning? That's kind of, there's no challenge in that. That's kind of stupid. So there are certain things, I'm going to do things by the book, but I'm also willing to be, merciless when that's what's required. Like in the Israeli conflict there, right? Like Hamas has to go. Like that's just the end of it. Is Hamas needs to be destroyed, and I support any measures necessary to make that happen. And yes, that probably means that a lot of civilians will die. It's very unfortunate. That's Hamas's fault because they intentionally entrench themselves in civilians so that taking them out causes the greatest civilian toll possible. But that's just the way it is. This is like your alternative is to just do nothing and wait for them to come and kill you again, and to continue to subjugate and oppress the people in Palestine and in Gaza. So I think it's worth it, right? And people will try and weaponize your sympathy against you. I'm not going to do that, but I'm not going to go in and authorize war crimes, right? You're going to do it by the book. And I don't think that the CIA and the FBI look at it that way. The CIA and FBI see the world stage as basically a Wild West, and they do whatever it is that they think will help the United States the most. And they're willing to look at, because there's always you can find these documents of them suggesting doing this and suggesting doing that. They don't happen, but yeah, they plan every contingency. Yeah, it's a little messed up. It's a little messed up. The U.S. pushed India into Russia's arms? Okay, so explain that to me. What happened recently that pushed India into Russia's arms? Okay, I disagree on the point that India is a Russian or Chinese ally. India is running its own independent politics. Cooperation with Russia is just convenient. Okay, that might be true too. But wouldn't you say that India is more allied with Russia than it is with the United States at this current time? Because the last president, who wasn't it a woman? I forget. The last president was quite pro-Western. I think we need your... Do you not have it? If you have Ninja Trader, you just send me your machine ID and I'll give it to you. You've been around long enough that... India's not Russia's ally. They just have a mute. Oh, but that's not what I said. No, come on. I don't think that's okay. So I asked, what was it that the United States did that pushed them into Russia's arms? And he says, again, read the whole Nixon and Kissinger threats in the 70s. I don't think that can really answer the question, because it was only like 4 years ago that India and the West were buddy, right? It was just like when this one guy got elected into power when it changed. So what happened in that 4-year time frame that pushed them into Russia's arms? It kind of doesn't really make sense to me. Like if they had been allied against the United States ever since that had happened in the 70s, that would be like a different thing. But instead, it seems to me that in the last 5 years or so, that there's been a political shift in India away from the United States and the West, and I don't know where that's coming from. And maybe I'm wrong, and it's just that one guy, and another party will come into power and it'll be different. I think a lot of people are kind of assuming that. But could be that there's been kind of a political shift in India, and I'm asking what was that shift that happened in the last 5 years? It seems like there is this idea that you're with us or you're with them. That's just not true for many countries. Many follow their own path. Well, okay. We can argue about that one, maybe. Russia's arm, it isn't. You just... I can't talk specifically why anti-US due to Modi. Your State Department had him on a travel blacklist for like 15 years for no... Well, okay, well... That's interesting. So there's some really interesting game theory when it comes to geopolitics on this, right? Because like let's look at the example of a ceasefire, right? You can't, if you have two opposing countries and they're fighting, and then you want to have a ceasefire, and so you agree to a ceasefire, then really all you're doing is providing your enemy an opportunity to come in and attack you, right? You're leaving yourself vulnerable. And so it's one of those game theory situations where you kind of have to do what is best for you. And that basically against what would be the best case scenario, which would be that there's just a ceasefire and hostilities cease, right? But because of game theory, that they don't do that, because if your opponent decides to break it, then you're absolutely screwed, and so both of you end up breaking it. So it's a prisoner's dilemma, essentially, right? So the only way that you can broker a ceasefire is for there to be a third party, because now if there's a third party, now you can create a situation where you have a strong incentive not to break the ceasefire, right? So you can only broker a ceasefire with a third party, which is why, by the way, U.S. asking for a ceasefire. That's why so many people are like so up on that, because if the United States pushes for it and that happens, and the only way that it could happen is if the U.S. and other UN nations negotiated one, right? So that dynamic is always kind of playing out, and that kind of creates an environment where loyalty matters a lot. One of the reasons why the United States has been so successful in this position of kind of like being the police of the world and creating this global economy that we have, one of the biggest things that helps them is that they have such a strong and close relationship with the other English-speaking countries like the UK and Australia, right? So those two relationships, they were like this, right? 100% trust there. There's 100% trust there. There is zero chance that the United Kingdom would ever attack the United States, right? So I totally understand why, especially in certain cultures, a nation would want to say, well, you know, I don't have this beef with Russia and China that you have, so I can be friendly with both of them and kind of form my own path. But from the game theory perspective, I think that you kind of want to be all in. You kind of want to say, okay, there's these two competing, that we're now in a multi-axis world. Which group do I want to align myself with? China and Russia, or the United States and the West? And my argument is that the United States and the West and their view of the world is much more compatible with the morals and views and culture of India than Russia and China is. And it kind of is an all or nothing thing. I kind of think that, I believe that if Russia and China win this, that you're going to see a very different world. And it will not be a world that you will like. It will be a world where freedoms are severely curtailed. It'll be a world that's less safe for you. I think that you want to ally yourselves with Western values. And I think that there should really be a really stark warning for people around the world, whether they're allying themselves with China and Russia on this, like Russia invading and stuff like that, or whether you're kind of being sympathetic to Hamas in Israel. Because I'm telling you, man, there is a group of people there that they want an Islamic caliphate that will go and take over the whole world militarily. That's like what they did for centuries, guys. It's what they did for centuries, and there's a large portion of people that still want to do that. And it's not going to turn out very good for you if you try and play nice with them and you try and ally yourselves with them against Western values. It's just not going to result in a good world. So in my view, it kind of is. It kind of is. What was the term that you used? But in my view, I think it kind of is. You're either with us or you're not. Because my view is you either want a world that's driven by Western morals and values, or you want a world driven by China's values. And I don't like China's values. I like China as a place and I like China as a people, but the world that the CCP wants is not the world that I want. I think the same applies between Japan and the US and with US and Britain, mostly because it is in Japan's best interest when it comes to a potential war against China. Yeah. Well, there's a certain point at which you become, you've been allies for so long and all of this that you just have that 100% trust. I thought that was the case with India, but apparently India doesn't see it that way. But I think that most people in the United States kind of assumed that. Like, we kind of thought that everybody that was allied with the United States would always be allied with the United States. And so now when we're growing up and we find that the world is actually more complicated than that, we're a little bit taken back. Yeah. I was a little bit surprised by it to see how India started to behave after Modi got in. Man, we really dove down that hole. There was something else we were talking about. I think we were talking about, something that was on my mind that I didn't mention was that Daniel Inskeep, he's been trying to become a funded trader for a long time. And he's done like now the 4th or 5th video on this. And this last time he actually did get funded. And he used Top Step. And that's how I knew that they had changed their trailing drawdown rule to only include the high water mark as of the close of a trade. But it also kind of appears to me that he's kind of using the same BS that most people that get funded do. Like, he made basically all of his profits in 2 or 3 days. Right? So I don't have a whole lot of confidence in him keeping the account, but I thought Lucas would be interested in that whole thing. How are you able to change the wick colors? Oh. Well, on this chart, I'm not doing that. But there is a chart style out there called Candlestick Plus Plus. I stopped using it because I was concerned that there was some inefficiencies in how it was drawing. And I've never gotten around to fixing that. Let me, hold on. When I say these sorts of things, I should really be making a sticky note for it. So let's do that, yeah? Come on. I'm not interested in other. I see what they talk about and how they trade in the earn to trade. Wait, ET2T? Is that the earn to trade Discord? And it upsets me. I mean, you're basically, I feel like you're kind of in the same place that I am, which is you want people to collaborate with. It's hard, and you realize that it would really help to have other people to work with you, but you're not really finding the perfect people to collaborate with. Almost all of the retail traders are brand new and don't have an effing clue what they're talking about. And then when you get into the more experienced traders, they're doing things different enough from what you're trying to do that it doesn't necessarily fit, right? Because you're trying to scalp. I'm trying to do informational inefficiencies. This is really hard to get the collaboration going. I think to some extent, you have to find people that are willing to bend and accommodate themselves with you, with the expecting that doing so will make you all stronger in the long run. With all that money blowing accounts on evols, they probably would have enough capital to trade. Oh, I'm sure. We see the same percentages in funding programs as the trading world. Only 4 to 5 get funded and make money. Well, sure. I'm way more interested in of the people that actually get funded. Of the people that actually get funded, how long do they keep the account? That's one of the things that interests me the most. Okay, so I need a teal one here. Candlestick plus will plus. Because I had seen some stuff with, there's like this little thing where you can kind of see how much processor usage different indicators are using and so forth. And I was kind of questioning both the Candlestick Plus Plus and the default NinjaTrader one. So some YouTuber did a video on payouts from Apex, and some Apex guy with Wells. Cool. But out of how many people that got funded was able to withdraw that much? I don't have a link to the Candlestick Plus Plus indicator. I think I found it on NinjaTrader, but I don't really know where I got it from. Sorry, I think I got it from Futures.io, but I don't really remember. You think it's still possible to make money in the market when AI becomes more popular? Or, well, okay, that's the one that's always a funny question. You know, it hasn't been asked on the stream in a while, but it comes up on TikTok a lot. The market has been in that place for like almost 10, 20 years now. So they started to make robots starting in the 80s and 90s. Once we got into electronic markets into 2000s, things really accelerated. Now, in the 2000s, there was a lot of people that were at the forefront of electronic trading. They made a ton of money. So most of the stories that we hear of phenomenally successful traders come from that era, like the early 2000s. when 2008 came along, a lot of players got washed out, and that kind of provided the opportunity for the robots to come in and take over. And so by 2010, like almost all of the market making had been taken over by robots. So almost all of the market making, intraday trading that is profitable is taking place with robots that have really fast connections to the exchange. And yes, these robots were even using things like these kinds of machine learning models to enhance their trading. And so they've been using that stuff for a really, really long time. Now, I haven't seen an example of a large language model being used with trading. I don't know if a large language model like ChatGPT would necessarily be very good at trading. You could use those same algorithms to train a machine learn, but that's what I've been saying they've already been doing, right? So yes, they're already there. It does make trading difficult for humans, but what it means is you have to adjust. Like, the market is competitive. There are certain strategies that don't work for us that would work for other people because they have different resources available to them. They have more money, they have faster connections to the exchange, they have better information, et cetera, right? And so that just means that we have to dig around and look at the market and understand the market so that we can understand where we might be able to find an edge on those robots, right? There are some deficiencies with those robots. They don't really know what's going on. So in a situation where you know something is going on and you can see that the market maker is not interpreting it correctly, you can take advantage of that. That's how we were able to make money yesterday. So, but it does make it more difficult. I don't know that you are a great trader for following these rules, but even if you were, what you are risking is predefined. You only pay for the evaluation and the fees, but the upside in comparison is huge. That's how I feel that there are ways to game the robots. Yeah, yeah. But that's the whole thing that I'm trying to say is that the biggest advantage you have over the robots is being informed. So even if you're going to do a scalping strategy, it's utilizing what you know about the markets to only market make on one direction and things like that can kind of give you a leg up on them. Those robots, they market make both ways, right? For the most part, as far as I can tell, at least. Anyway, so okay, so I wrote down the candlestick indicator. There was something else that we were talking about yesterday. What were we talking about doing yesterday? I was like, oh, I would really like to do that, but don't have the time. Might have had something to do with correlations. Oh, we were talking about a basis indicator. That's one that I do think we should do at some point. I'm gonna call it basis. Estimate. I keep changing the way that I write, and I'm having a hard time adjusting. So I need to get. I want to hold it like this with my thumb, like almost hyperextended, and I really need to do it like that so you can get some good pressure, and it takes a little bit to get used to. Yeah, well-informed flow is what screws robots do. You know what? The thing is that someday the market will change. We live in the age of dinosaurs right now. There are these huge index funds and hedge funds that just absolutely dominate the market. And there is a little bit of a winner takes all kind of thing going on in markets a lot, I think. You know, and that's why you end up with these big players. But I think that someday the meteor is going to come and all of those dinosaurs are going to evaporate. Basically, you can see things where because of a regulatory change to markets, maybe because of a macroeconomic change to markets, you know, you could see the market shift really radically. Right now, the best thing to do for maximum capital gain is to just put your money in an index fund, right? But best risk reward on capital gain is an index fund, right? But that might not always be the case. So the market may shift in a way that makes index trading too expensive. You never know. And I think part of the game is keeping up with the market well enough that when those sorts of things happen, you'll know and you can be at the front of it. And that's where you can really make massive amounts of money. Yeah, I'm sure that, and especially in the beginning, there probably were some people that did this funded trader thing and made massive amounts of money from it. You know, if we were still in the quantitative easing era, dude, if quantitative easing comes back, oh dear, I have an event. My phone only just now notified me about it. I guess I should get going. But yeah. I forgot what I was even saying now. That's so funny. Anyways, something could happen, could completely shift the market, and you can be at the forefront, and that's where you can make some big money. But yeah, guys, I gotta get going. I was yeah. My phone did not notify me correctly for some reason, so I don't know what's with that. But I will see you guys tomorrow. There's still a lot of stuff coming this week, so I'll see you then. Stay